Strategies to create cash flow. What is cash flow? The net amount of cash and cash equivalents coming into and going out of a business is referred to as cash flow. Money spent and money received reflect inflows and outflows, respectively. Fundamentally, a company's capacity to produce positive cash flows, or, more specifically, to optimize long-term free cash flow, determines its capacity to provide value for shareholders. In this video, we are going to talk about 9 strategies to create cash flow. So before starting, please like this video and subscribe to this channel for our future updates. Number 9. Monitor where your money is going. It's not necessarily a negative thing to incur debt. In some cases, borrowing money can be a short-term solution while your company develops the strength to survive on its own. However, if you take on debt, you should pay close attention to and assess how much cash you have available. As Schwartz noted, a corporation should still determine how much debt it can take on in order to not be over-leveraged. Taking on debt can be important to coasting through terrible times. The debt will be repaid either by investing in growth or after the client pays an invoice, but those options need taking time, interest, and other factors into account. Number 8. Adjust your inventory as needed. Check your inventory to find products that aren't doing well on the market. These goods reduce your cash flow because the money you spend to buy them doesn't result in sales and consequently revenue. By selling these less commonly bought items at a loss and refraining from purchasing more stock until the current supply is gone, you can solve the cash flow issue. In a similar vein, you may always spend extra money stocking up on things that do well. Number 7. Use electronic payments. If you pay bills online, you can put off paying until the morning of the due date. Your cash flow is improved by this purchase of time. Additionally, you can utilize a business credit card because some of them include a grace period of up to 21 days, which can significantly improve your cash flow. You could even receive money back. Don't, however, take on excessive debt. Number 6. Don't wait to send invoices. Cash flow, once more, is important since it makes a distinction between bills you've submitted and those that have actually been paid. That $10,000 invoice doesn't mean much if you don't already have that sum of money on hand to pay your bills. You should therefore not be hesitant to send invoices. Instead of sending invoices once a month, you might want to switch to sending them after you finish a set amount of work. Number 5. Determine the ending balance. The closing balance of cash and cash equivalents at the conclusion of the reporting period can be calculated after cash flows from the 3 primary categories of company activities have been taken into consideration. The sum of the cash flows from operating, investing, and financing operations equals the change in net cash for the time period. This figure represents the overall cash flow a business made or lost during the reporting period. Number 4. Calculate cash flow from financing activity. The cash inflows and outflows associated with financing operations are examined in the 3rd area of the cash flow statement. This comprises financial flows related to raising money and repaying obligations owed to creditors and investors, as well as cash flows from both debt and equity financing. Dividends paid, which might be included in the operational part when using IFRS standards, are also included in this area when using generally accepted accounting principle. Under the generally accepted accounting principle, interest paid is recorded in the operational section. However, under IFRS, it is also occasionally recorded in the financing section. Number 3. Calculate cash flow from investing activities. You must determine cash flows from investment activities after determining cash flows from operating operations. The cash flows associated with purchasing and selling long-term assets like real estate, buildings, and equipment are described in this portion of the cash flow statement. Remember that only debt-free investing activities are covered in this section. Number 2. Calculate cash flow from operating activities. When you have your starting balance, you need to calculate cash flow from operating activities. This step is crucial because it reveals how much cash a company generated from its operations. Cash flow from operations are calculated using either the direct or indirect method. Direct method. It is simple to determine cash flow from operating activities using the direct technique by adding up all of the cash receipts from operations and deducting all of the cash outlays from operations. With this method, all transactions that led to cash payments or receipts during the reporting period are listed. Indirect method. In order to reverse the effects of the accruals made during the reporting period, you must start with net income from the income statement when computing cash flow from operational activities. Depreciation and amortization are two of the most frequent and reliable adjustments. Although the direct technique is simpler to comprehend, it takes more time because every transaction that occurred during the reporting period must be accounted for. Because it is quicker and closely related to the balance sheet, the indirect method is preferred by the majority of businesses. However, both approaches are recognized by international financial reporting standards and generally accepted accounting principles. Number 1. Determine the starting balance. Finding the starting amount of cash and cash equivalents at the start of the reporting period is the first step in creating a cash flow statement. The income statement for the same accounting period has this figure. When utilizing the indirect technique to compute cash flow from operating operations, the starting cash balance is required. However, this information is not necessary for the direct method. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.